OP Financial Group had a good result despite the uncertain business environment. Our earnings before tax were 940 million euros between January and September, increased by 9.6% compared to the last year. Income from the customer business increased by 7% to 2,431 million euros. Income growth was boosted by strong growth in net interest income in the retail banking, and the earnings recorded in the retail banking segment were on a very good level. Earnings before tax increased over 50% to 335 million euros. In the insurance segment, the claims trend normalized, and the claims expenditure rebounded to its pre-pandemic level. Insurance earnings before taxes were 390 million euros. In corporate banking, earnings before tax decreased to 220 million euros. In the challenging capital market, investment income was clearly lower than a year ago. Compared to the last year, total income increased by 3% and total expenses by 1%. The loan portfolio showed an annual growth rate of 4% and at the same time deposit base annual growth rate of 1%. Despite the weaker economic environment, impairment loss on receivables remained low both in retail and corporate banking. OP Financial Group's CET ratio was very strong, reaching 17.7% at the end of September. This exceeds the minimum regulatory requirement by 5.9 percentage points. If we look at the year-on-year change of our P&L items, we can see that our net interest income increased by 16% to 1,122 million euros. We saw an increase of the net interest income in all of our four segments. The loan portfolio showed an annual growth rate of 4%, totaling at 99 billion euros. At the same time, deposits grew by 1%, totaling at 75 billion euros. We saw a 2% increase in net insurance income to 553 million euros. The insurance segment non-life insurance premium revenue increased by 5% and claims incurred by 20% to 765 million euros. Large claims increased, total claims incurred by 135 million euros. The increase of the discount rate for insurance liability improved net insurance income by 96 million euros. On the OP Financial Group level, net commissions and fees came slightly down by 1% and total at 756 million euros. In retail banking, we actually saw a 4% increase in net commissions and fees, but in corporate banking segment, those came down. The investment environment was challenging due to the higher interest rates and lower stock prices. Net investment income decreased by 325 million to minus 73 million, but including the overlay approach, investment income decreased by 41% to plus 120 million euros. Then moving on the expenses side, the total expenses increased modestly by 1%. Personnel costs decreased and depreciation and impairment losses were 33 million lower than a year ago. However, on the operating expenses, other operating expenses increased by 10% to 630 million euros. Charges of the financial authorities increased due to the higher stability contribution, which is paid to the Single Resolution Fund financed by the Euro area banks. We also saw an increase on our ICT costs totaling to 277 million euros, up from the 251 million a year ago. Impairment losses decreased by 24 million euros in the first 9 months. All in all, these P&L items resulted to 940 million euros earnings before tax for the OP Financial Group during the first 9 months of this year. Regarding impairment losses on receivables in their income statement decreased by 24 million euros to 70 million euros year on year. And the ratio of impairment loss on receivables to loan and guarantee portfolio was 9 basis points. Impairment loss was significantly reduced by the repayments of the certain non-performing exposures, and the final net loan losses recognized total 82 million euros. OP Financial Group's CET1 ratio was very strong at 17.7%, which exceeds the minimum regulatory requirement by 5.9 percentage points. OP Financial Group adopted actually a risk-weighted assets floor based on the standardized approach in the second quarter. This decreased our CET1 ratio by 1 percentage point. The CET1 capital of the OP Financial Group as a credit institution was 12.6 billion euros, and it was improved by banking earnings and the profit share issues. Risk exposure amount totaled to 70.8 billion euros. This is an 8% higher than year-end 2021. The floor based on standardized approach increased the total risk exposure amount. All in all, our group financial risk position is good and stable. OP Financial Group's funding and liquidity position is strong. In September, OP Corporate Bank issued a senior preferred bond of 1.25 billion euros. OP Financial Group's buffer for the MREL was 8.1 billion euros and for the subordination requirement 2.4 billion euros. Our liquidity coverage ratio, known as LCR, was 210%, and the net stable funding ratio was 132%. These ratios are good level. As said, OP's funding and liquidity position is strong. In September, we also raised OP Financial Group's earnings outlook for 2022. We expect now our earnings before tax to be at about the same level or higher than 2021. To summarize, OP Financial Group had a strong third quarter and good result in an uncertain business environment.